Welcome to LSE Share Talk.
Thank you very much indeed.
Formation Group Plc, you're on AIM, FRM. Just before we start in the company, Willie, you have a barrister, an accountant, political background.
Yes, I'm government minister, former government minister in Ireland and sitting member of Parliament.
All right. I was going to say, because the listeners, what would your opinion be on the recovery of the Republic of Ireland since the financial crisis?
It's very good actually. I mean, growth here is projected at over 5% for the next 12 months, which is very good. If I'm not greatly mistaken, it's probably the highest growth rate in Europe.
All right.
And, not unlike the UK, there's a massive housing shortage here, and there's going to be a lot of building activity, which will further, I think, enhance the economy and create a lot of, there will be a lot of activity here on the building, on the building side and the house building side in particular over the next 2 or 3 years because of the massive shortage we have here. Exports are growing pretty strongly. The financials have been brought back into line, as it were. The deficit is practically eliminated. And so we're in a pretty good position. I mean, there's a couple of headwinds out there. Obviously, Brexit, if it occurs, would have an effect on us. A sharp increase in interest rates, of course, will also have an effect on us because we're, for all sorts of reasons, not least that we're a pretty heavily indebted country. But, I mean, overall, the economy is looking very positive. I mean, the feel-good factor here is very, very evident.
Just obviously now I've got the chance before we touch on the company because of your political background. What's your view on the impact of the Brexit and the London property market?
Well, I don't know, but I mean, obviously, the Brexit is going to cause a bit of, uncertainty in the short term. If it happens, I mean, if it doesn't happen, I mean, I think it'll be tremendously good for the UK economy. If it happens, there will be a bit of uncertainty in the short term. Likely, I think, in relation to the property market, I think could be more likely to have an impact on the top end of the market. I mean, as you know, there are two markets. I mean, the top end of the market, which is driven to a large extent by foreign capital, which is going into London. You have the bottom end of the market where first-time buyers, etc., permission development projects. The government are trying to encourage, trying to create a situation there where there's up to a million new houses going to be supplied to the UK over the next 3 to 4 years. And they've put in very considerable incentives to do that. Now, that's the end of the market that we are focused on. That is our market. They're our customers.
Yeah, I was going to touch on that because the Formation Group, you're a professional construction management service to its clients in the property sector. Well, which segments of the property sector does the company currently work in?
At the moment, exclusively housing. Housing market. A little bit on the commercial side. When we've 2 developments just completed at the moment. One in Streatham in South London, and the other on Iverson Road, London Northwest. In Iverson Road, you've got 19 housing, units, domestic units, and 1 commercial unit. In Streatham, you've got 103 housing units and 3 commercial units. So our focus at the moment is on the housing end. But I mean, some of the people involved with the company have a lot of expertise in the commercial end. I mean, we could switch into that more strongly if we thought, the opportunities were there.
All right. Just what do you choose to focus on in the low to the mid end of the property markets? What do you guys look for?
We're looking for flats in the outer London area, and we're looking where engaged in some negotiations at the moment. Where the actual, which would be fall under the permission development rules, and the price will be, under 450,000. In other words, we're looking at the first-time purchasers market to a large extent. Now, in addition to that, in Ireland, we're in Streatham in South London was a joint project. Now, with that company that we did the joint project with, We're looking at a number of opportunities because that company has very strong Irish connections. We're looking at a number of opportunities here as well. The government here is giving incentives, to develop social housing, and also incentives for developers who would provide houses that can be afforded by first-time house purchasers. So we're looking at a possible joint venture over here in the Republic of Ireland as well.
Oh, but essentially, you started in the Republic of Ireland, have grown rapidly. You've boosted from the continued GDP recovery since the financial crisis, really, Republic of Ireland.
Well, yes. I mean, obviously, as you will be aware, we had to enter into a particular agreement with a number of financial organisations, the EU, the IMF, etc., to bring the debt to reduce our outlay and bring the deficit back under control. But I mean, we've successfully done that now, I think. And we're top of the class now as far as the Europeans are concerned. And that does create the climate. That does create a good climate for investment, obviously.
Definitely. Well, from the formation group, are you looking to develop the construction side of the business? How would that progress over the last 12 months?
I think our focus mainly for the moment, the immediate future, will be development. We have returned in many years. We're showing a profit last year. I think it was just 1.81 million net of tax. Now, we did say when the results were announced last year, we projected that would strongly increase this year. And we're about to announce interim results for the first 6 months of this year. That's the period ending at the end of March, sometime later this month. And I think the figures will bear out our predictions. If we did strongly increase profitability, I think maybe I confidently predict that we will be showing a substantial increase in profitability.
All right, because did you
grow on the construction management side? Well, we're going to keep. Obviously, we're going to retain that business. I mean, it's been enormous. We started there, and it's enormous benefit to the company from the point of cash flow. It also gives us a very something that many people mightn't appreciate at first glance. It gives us a tremendous competitive advantage on the development side, in that we have our own in-house construction company, which can do all projects as well. We don't have to farm it out to a third party, as it were, so they'll get their slice of the action as well.
Yeah, obviously you're concentrating a lot in the London property markets, because obviously your headquarters is in the East London.
Yeah, we're looking. Well, I mean, we are in the sense that we see opportunities in London, particularly in the outer London area, where we're involved in active negotiations at the moment. But we're not adverse to moving out of London, and as I've said, we're actively looking at the possibility of one or two joint ventures here in the Republic of Ireland as well.
Yeah, but you said, the southeast and the northeast plus the Republic, yeah. What are the risks and the headwinds facing the company?
Well, I suppose the risk would be a sharp slowdown in the market, but we're in a fairly good position to deal with that. We're a very strong balance sheet, and it might even come around to our advantage, in the sense that we hope we have the cash to buy, assets that have been sold in the event of a downturn. The other side of it is, of course, that we're not actively going out to acquire property for rental purposes, but I think we'd be financially strong enough that if we couldn't sell some of the property we developed, we'd be able to rent it out in the meantime, because, as you know yourself, the usual situation is that when prices fall, rental goes up. And if you look at the projections of Savills and all the various estate agents and Nice Water, etc., as to what could happen in London, they would predict that the rental market would rise in tandem with a fall in the actual property market.
Definitely. How are things progressing for the company in the education sector?
Well, very well.
Students' accommodation.
We did a project on our own. Can you hear me there, Alex?
Yeah, I can. Sorry, I know it's a long way away.
We did a project, which was an exclusive formation project at Iverson Road. We've done very well there. Everything came in on target, sometimes above target. In some particular properties, above target. We're off-site now. We're completing the last few. We have the we did by way of joint venture with a company which is controlled by our principal shareholder. And we were in for 40% of the profit there, and we did very well there. The profits there came to over £10 million. So our share of that was obviously over £4 million. So we've virtually completed those, and we're in a strong position. We're cash rich, and we've established an excellent relationship with the banks. The fact that our principal shareholder is a very well-established developer with property involved in property development all over the world, we have the option at any time in relation to any site he'd acquire, whether in London or anywhere else in the UK or outside the UK, to go into a joint venture with his company to develop. So we're in a fairly unique position from that point of view.
Yeah, that was going to be one of my next questions, actually. Can you tell us of some of the large projects and joint ventures that FRM are involved in?
Well, I mean, we have on the development side, you mean? On the development, the only two we've done so far is the joint venture in Streatham in South London, which was 150 apartments, flat stock apartments, plus 3 commercial units. And that was a joint venture of 40-60. We were in for 40%. In Iverson Road, it's 19 residential units and 1 commercial unit. And we've completed those, and we've pretty much sold them on successfully, which will be reflected in our profit figures. And as I said, we're actively looking at how we put that money to best use. We've also developed a very good, strong relationship with the banks. So, we're hoping we'll have a good line of credit, and I can tell you we will have a good line of credit available to us, provided we come up with the right project.
You definitely seem in a strong position.
We have a strong position, yeah. We have a strong position, but in a quite unique position because of our relationship with the Kennedy Group, which are hugely successful developers and have an enormous amount of contacts with regards, locating sites, etc. Now, certainly, admittedly, in London at the moment, I mean, there's a lot of developers chasing that particular market at the moment, trying to acquire sites for where they can develop.
Yeah.
It's a first-time purchase. We're in a good position because we've got a connection. As I said, we have our own in-house construction company, which makes us that bit more competitive.
That's what I was going to touch on next year. With having your own in-house design team and construction specialist, does this put you at an advantage compared to other similar-sized Ps in the sector?
It is. It's a considerable advantage. Number one, you have more control over the situation.
Exactly.
Number two, you're doing it for yourself, what you'd be given to somebody else to do. And everybody, as you know yourself, Alex, in this world, everybody has to make a few bob. So, I mean,
True.
Might as well do it ourselves.
Just to touch on this one, who do you see as your competitors? Do you think of that, or do you not take that into consideration?
Not particularly, no. I mean, there's a lot. Some of the... No, I mean, look, our competitors vary. I mean, some people start on this particular side of the market and they grow big, and some people do development and they move on elsewhere. No, we don't focus on competitors. No, we just focus on our own business. I mean, the only time we come across our competitors, Alex, quite frankly, is when we're trying to acquire sites of big value.
Yeah. What's in the pipeline for the company? What would you say to investors?
Well, what I would say to investors is that, revenue has trebled. The construction management side, revenue has trebled literally over the last 18 months. We're back in profit. The new interim results, which shows the first 6 months of this year, will prove that profit is growing strongly.
Yeah.
And we're in a position both financially and in terms of connections and contacts to acquire a number of sites now. We're actively working on it, which will ensure that profitability continues through 2017, 2018.
So I'm going to touch on the shares at the back end, but so what is the outlook for the company? What you're looking at, what you're doing?
The outlook in what sense? Well,
to grow the business. What would you say?
Well, we intend to focus for the moment on the residential side of things.
Yeah.
You know, I mean, if there are appropriate opportunities in the commercial side, as I say, we have done a few commercial developments, and both those developments I mentioned here, there were some of them, a small part of them were commercial. We're also looking at the social housing market in Ireland, where there's huge demand.
Yeah.
And also looking at maybe the first-time house purchases market in Ireland, where there's also a huge pent-up demand and a huge pressure on the government here to supply that demand.
Yeah, definitely. So what I'll touch on now is a significant amount of your shares are held by majority shareholders and company insiders, leaving only a small free float for private investors. Do you see this as
Sorry, Alex. Sorry, I missed you there. What did you say there?
Sorry, I apologise, the phone line. So what I'm saying, a significant amount of your shares are held by major shareholders and company insiders, leaving only a small free float for private investors.
Well, yes. Well, about just over 50%. Well, something over 50%. Yes.
Definitely,
but,
yeah.
You know, there has been quite a substantial amount of dealing in the shares. I mean, the share price went to over 10 pence at one point.
It did, yeah, in January actually. It hit 12p.
Yeah, I think maybe the lack of information flow in the meantime, which is partly my fault because I've been very much involved here. I was trying to get re-elected here, Alex. You know, we had a general election here in the meantime. And,
politics.
I suppose we weren't as proactive on telling people what we were doing. But, you know, we will be very proactive from here on in, because the first thing we've got is our interim results. And secondly, I hope that, you know, within the very, very near future, maybe hopefully, if all works well, in conjunction with our interim results, to announce a couple of more projects.
All right, because I'm looking at that, your market cap's just over 12 million. You've got about 220 million shares in issue. And with less liquidity in the stock, in the market, what I'm seeing is, a positive attribute from the company is so much of the shares are held by insiders showing faith by having so much skin in the game.
Yeah, but we have taken on board a new market maker has come on board now.
All right.
That might be, and the other thing is that situation may change. I mean, I'm not authorized to say it's definitely going to change, but that may change. We're having discussions about that.
Yeah.
And we may be, obviously in agreement with the principal shareholder, he may be prepared to reduce his holding to improve liquidity.
Yeah, because you can see that. But the thing I would touch on there, it's not a negative thing. It's a positive thing, because if you bring good news to the markets, there's only so much liquidity stock in the market. That's what I'm trying to drive at.
Well, it has caused a problem. It has caused a problem in the past, and it does tend to affect how quickly the share price can increase, despite the good news. That is certainly a problem. The board is actively discussing ways to resolve that problem.
All right. Right, the next one, the one that will follow on for that one, when does the company intend to pay dividends?
Well, I think that maybe, provided our own private projections for profitability are borne out this year, which I think they will, it's something that we'll actively look at in 12 months' time. We wouldn't be doing it for another 12 months. We need to get a couple of more projects under our belt first, you know. Okay.
And just the last one, what is your route to delivering consistent profitability and increased revenue?
That again, Alex?
Sorry, I apologise. What is your route to delivering consistent profitability and increased revenue? What are you guys going to do?
What we're going to do is we're going to identify the sites where the demand is going to be, where people are in a position to purchase. And we're going to look, I mean, that means looking at particular locations in London, first of all, if you're dealing with the London market, locations outside London where there's potential for growth, and places outside the UK, particularly here in the Republic of Ireland.
Definitely. By the way, Willie, thanks very much for talking to us today. And
Alex, my pleasure.
It looks just honestly, it looks a very, very interesting story.
Well, I'll tell you, to be honest with you, Alex, between you and me, I mean, I don't say this publicly. I mean, as chairman, I suppose I can't say this publicly, but I think the stock is grossly undervalued.
All right, I'm just looking across this. This is a story we're going to carry on following. And by the way, thank you very much for talking to LSE Share Talk today, Willie.
Yeah, no problem at all, Alice. Give me a ring when the interim results are coming out. Give me a ring and I'll talk to you at that point, okay? It'll be in a few weeks' time.
By the way, I'm glad to, and good luck in the elections as well.
Okay, Alice.
All right, bye-bye.
Good to talk to you. Cheers.